This is Robert Harper with Farm Bureau's Grain Division, bringing you the Merchandiser Minute for Friday, March the 8th, 2019. With the word this week in the trade was anxiety. We saw funds continue to sell off in the futures market as they consolidate. We heard rumors and news about a recession emerging in China that got international speculators anxious, and we saw that all the way in Chicago as they trade corn, wheat, and bean futures. We want to start off today talking about what in the world is wrong with wheat. We lost another 18 cents a bushel this week on the nearby wheat futures contract, and you can look at many different influences. You can look at how mild the winter has been in Europe. You can see that as putting pressure on price. There's wheat there coming out of dormancy. You can look at Russia's continued absolutely brisk pace of export sales. And you can look at today's carryout number from the crop report of 1 billion bushels for U.S. wheat carryout. All that put a lot of pressure on wheat, and that pulled corn down also this week, 9 cents a bushel. We do get the first accurate commitment of traders report today at 4 o'clock. Look for that thing. You can find it on social media. You're going to see the opinion of the managed money speculator. They're building big short positions in Chicago across the board, corn, wheat, and beans, and that's very counter-cyclical or odd for this time of year as they're building short positions going into North American planting. When you take a quick snapshot at the crop report today, South American production numbers were not changed at all for Argentina. The USDA did slightly lower the expected soybean production in Brazil, but it's still a big crop, and remember they're 50% harvested of that crop down there today. When we look at ending stock numbers, not really big changes for U.S. ending stocks. 1 billion bushels left over for wheat this marketing year that ends in 3 months. 1.8 billion in corn and 900 million in soybeans. So the market kind of took that as neutral. That information was already known. Some headlines that affected your price this week. We saw that African swine fever in China is now estimated at taking 10% of the soybean demand away there. South American weather is neutral. We've got extreme cold in the Corn Belt, extreme wetness, favoring more soybean acres as many analysts think planting might get started later. And remember, be planting next week. It's National Ag Day on March the 14th. Be looking for any trade news you can find. Maybe reports next week won't be conflicting like they were this week on the China deal. And March 29th is also the date for Brexit. And be watching next week because the UK is going to be voting on another plan to exit. And they're saying if they don't get that plan voted on correctly next week, they're not leaving the European Union. That makes a big difference for you because remember, we're still trying to do a trade deal with the European Union. We've got excellent basis. Put your wish orders in with your buyers. The markets are trading headlines. Give us a call if we can help you. This is Robert at Farm Bureau's Grain Division.